start, one could imagine, of 2016. I mean, everything that could go wrong has gone wrong, whether it's geopolitical risks or global terror, or for that matter, the commodity crash, the equity meltdown. Has it taken you by surprise?
I think the global situation wasn't looking good for all. And moment you saw correction of commodity prices of the scale to which it has happened, it obviously means that something seriously challenging in the world. I was talking to one of the largest producers and dealers in commodities other than oil. And he said 50% of the global commodity demand comes from China. And that's slowing down like crazy. Combine that with excess oil production and all that. So this is a commodity-led downturn, a China-pressured downturn, excessively optimistic view about the US having a strong rebound, which I think is being questioned again. So you have a pretty rocky world. And in that context, frankly, I think India,
we're not looking so bad.
We're just getting too anxious.
You know, I'm glad you mentioned China, and let me ask you a very contra question, you know, because you are somebody who has contra calls. Can we blame it all on the Chinese jitters? Can we blame the entire crash? I mean, look at what has happened with the markets. They're down 20% from their highs. The rupee is testing levels of 68. Is there more than meets the eye other than China?
No, I think the fact of the matter is the world is a very rocky place, okay, and geopolitics is playing out. So there are lots of factors and confluence of those factors at the same time. Therefore, India actually has one of the best relative positions in this world, and we should not get excessively worried by this short-term volatility. It's doing the right things and looking through this storm.
I will speak to you about doing the right things, and I will also speak to you about the US in just a bit. But let me ask you, we've been speaking here for the last, 5 years now. Does 2016 January seem some bit like 2013?
I think it probably looks more like 2007-8.
Oh, it does?
In Davos. And I'm not saying about that you're going to see a global financial crisis by any sense, but the kind of mood you're getting in Davos is pretty bearish.
You know, the rupee kind of held its own for a while, and then of course it's begun to depreciate, and today I think it's tested levels of 68. How much more depreciation are you expecting for the currency?
See, currency you got to divide between fundamentals and technicals. In the short run, if global sovereign funds, because of their commitments to their own development agenda,
it will be pulled out.
They will sell out in the world. When that happens, there is a technical pressure on all global currencies. And India is no exception. So, on a $250 billion portfolio, a 5 to 10% outflow
is not all that something. It's not something that you lose sleep over.
And when the money came in, we liked it. And
so,
this is not
we'll
going
have to bear the brunt of what's
and this is not necessarily about fundamentals. This is purely about technicals.
You know, is volatility the new normal? And is 2016 teaching us that lesson? And also the question that I would want to add to that is India resilient enough to handle this volatility that the world is throwing at us?
See, let's be very clear. Volatility is a nice word for saying the markets are going down. The fact of the matter is markets are directionally down. So volatility is a good euphemism for markets which are getting bearish.
You're trying to optimize what is perhaps
exactly. The reality is markets are bearish. Global asset prices are deflating. There is an issue about global demand, as a result of which there is softening of all commodity prices. There is risk of capital outflows, and in that context, India had a current account deficit of about 1%, inflation under control. Hopefully, Mr. Jaitley will keep the fiscal deficit in reasonable control. I mean, India looks much more comfortable, but the danger is we should not get too comfortable.
And it always happens. We get complacent. We take our foot off the pedal. I'm just going to talk to you about risks of that. But in your conversation with global leaders, and I know you've been meeting a whole host of them here, is the risk of sentiment here to stay?
I would like to believe that this is the situation where we a bearish sentiment till the world finds a new level and a meaning of what geopolitics also, which will play out. So I am pretty bearish 6 months. You know, you talk about bullish 5 years.
You're bullish 5 years, bearish 6 months. So the pain is here to stay.
Yeah.
You know, you spoke about the fact that outflows is technical. This has nothing to do with the fundamental issues. Sovereign wealth funds want the money back home. It is going to go. The larger question, though, is: are you a little less worried about the macroeconomic situation in India? Whether it's a fiscal deficit, whether it's current account that you mentioned. Of course, growth continues to be a sore thumb, and it sticks out. It's not going to breach levels of 7%. But are you a little less worried about macroeconomy?
Supriya, when you get a bonanza of $70 to $80 billion, it is very comforting and can effectively hide a lot of our follies and pain.
Okay, do you believe the government has been able to leverage that bonanza enough?
I think one of the good things that the government has done is levy appropriate taxes and take it into the fiscs, so that, God forbid, if there is a turnaround in the oil cycle, they don't have to go and increase prices for consumers dramatically. The second issue thereafter is, having got this bonanza, I would love to see a situation where at some point of time we get our fiscal house in order. If we have to struggle to get our fiscal house in order,
then we've made some serious mistakes.
Oil with $30, I think we have got a lot of our past to correct.
You know, you've actually prompted me to my next question at many levels. You know, crude at 30, breaching levels before that, and still the old narrative in New Delhi is back. Should you be meeting the fiscal deficit target, or should you let the deficit expand? I'm going to ask you a more pragmatic question. Obviously, the government did let the fiscal expand. I mean, the fiscal consolidation was delayed by a year because it wanted to crowd in private investment. That obviously happens, hasn't happened for reasons beyond the government's control. The bigger question, though, is that do you think we can let the fisc expand at a time when we've got a bonanza, like you rightly mentioned, of $80 billion? Is this not going to hurt our credibility?
See,
are you someone who's not dogmatic about the last decimal point?
We this year, I think we'll be 3.9 or better.
That's right, yes.
Next year, the estimate is 3.5. Now, my view is we should be lower than 3.9 next year. But whether it's 3.5, 3.6, 3.7, I'm less dogmatic about it.
So you don't think, despite the windfall gain that we've got on crude?
But there are one-time costs also next year, now, OROP and stuff like that.
Seventh pay commission. Yeah. All right, you know, the other bit that the government wanted to do with its budget last year was they wanted to crowd in the private investment. That obviously hasn't happened, and for reasons beyond just the fiscal position, you know, overcapacities, lots of other reasons. Do you believe the global environment is going to further delay the investment cycle in India?
In my view, the government has to do the heavy lifting. They've got to increase public investment. Government companies have to take some of the load. Private investment at this stage, first of all, there is a fundamental challenge to the Indian business model.
Why do you say that?
Significant promoter-led businesses have leverage. And in deflationary times, even if nothing happens, debt keeps on going up, not down.
Yes.
And that's the problem which we are facing. So I would be very surprised if we saw massive private investment come in a hurry, because we don't have an alternate business model.
Growth levels of below sub 7% have been spoken about. The government believes it's going to be between 7.5% to 8%. They've tapered their growth projections already. Mr. Chidambaram has now written it's going to be sub 7%. Does sub 7% growth worry you?
At this point of time, what is more important for me is stable and sustainable growth. If we build a form for stability, create a opportunity for longer term sustainable growth, that's my view about the focus from here, and not thinking about point to point whether we are 7.5 or 8.
If I may turn this focus away from North Block onto Mint Street, does the global environment and the risk off and what the US Fed may do and what's happening in China, does all of that really rule out any rate cuts for the next 6 months?
My personal view is US Fed rate increases will be slow, much slower than the 4 increases which people think. And I think there is an issue in US. Okay,
I'm going to speak to you about the US in detail right away, but I want to ask you about the Indian rate cuts.
My view is 2016 we see 25 to 50 down from where we are.
From where we are in this calendar year?
Yes.
That may be heartening for a lot of your peers from Indian industry. 2 quick questions on the US. You know, so much has been made about the US economic recovery. We know it's wageless. That's point number 1. Do you believe the robustness of that economy is perhaps being a little too overstated?
See, the US 10-year treasury rates right now are back to 2%. Therefore, despite the rate hike in December,
that's right,
the rates are pretty soft at the longer end. It's telling us something. The second is, if the US dollar keeps on strengthening against everything else, it's bound to hurt US manufacturing. And I'm getting a sense that US economy will be slower than what most people have bargained.
And that's not good news for global growth at all.
That may not be good news for global growth, but it also keeps US interest rates a little softer.
China, the elephant in the room that everybody's been speaking about. So there are two ends of the spectrum that people are speaking on China. One are believers who believe that China is an economy in transition and this pain is bound to happen, and others who believe it's an economy in mess, they can't fix it. Which side of the spectrum are you on?
I think China will find a solution, but it will be a painful one. My view about Chinese growth is more like 5%.
And that is actually the real rate of growth, like lots of people are saying.
Absolutely.
You're saying that you're more bearish in China than some of your other counterparts are. How bearish are you on the impact that China will have on the global economy, including India?
I think it is part of what you're seeing right now is the impact of China. So it's low global commodities. It puts a lot of global banks at risk because global banks have large exposure to energy and commodities, and that's getting hurt.
So one last question before we let you go. A troubled neighborhood of sorts in China, a US that's not really growing. Good that interest rates will perhaps stay low. What should the focal point of budget 2016 be then?
Stability and sustainability.
And you would not expect the big bang reforms to happen? We've been speaking about them.
My sense is we need a series of things. I think we need a reformist mindset and also a little bolder liberal mindset simultaneously. Combining these two, reform and liberalization, are both important for our future.
Mr. Kotak, appreciate you joining us.
Thank you very much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.